Hey, Jonathan, welcome.
Hey, how are you?
I'm good. Oh, lots to talk about today. I have, first and foremost, let me just say thank you very much for coming in today after we just chatted earlier.
Yeah, no
um,
problem, no problem.
and let me just put this on here. Stop the share since people are coming in. Whew. Oh, that's why I'm not in here. Does that help? Hi there.
There we
Where are
go.
you?
All right, I'm good.
All right, awesome. So I know what I want to talk about today.
Okay.
Okay, so we were talking last week about picking some of our faves, game changers, kind of 2021 theme. I want to talk about the topic, which is decentralization. And this kind of hit me a little bit from our talk earlier on something so micro like your platform, VigTech.io, and my algos that are being built on your platform from LaDucTrading. And believe it or not, randomly as this was generated, I think it's game changing in the theme of 2021. It heightened because of what's happened with the sectors that have moved so violently in 2021 toward the end, right? Bitcoin, the whole theme really, decentralization, right? And it's not just one theme, there are many ancillary themes around it. And then I look at the outcry, obviously, whether you are for or against those House of Representatives 163 who voted against the 10 million you know, who voted for Biden and basically wanted to overturn the election, or the folks that rioted, the mob on Capitol Hill last week, which were also trying to. I'm not talking politically why they were following, and I'm just talking about this theme of not trusting centralized government, right? Not trusting the voting, not trusting the financial institutions. It goes on and on and on. So it's kind of an undercurrent, and I'm not talking about populism and disenfranchisement, but in particular, this reaction to, and again, not politically speaking, justified or not, to take down Trump's Twitter page, and then a dozen other platform providers and corporate tech leaders basically said, okay, well, we think he's a risk to Americans. We have autonomy because it's our platform. We own it. Let's go ahead and, help save democracy and step in here. Whatever their motivation, whether it's to, cozy up with the Biden administration, thwart some antitrust regulations coming down the pike, most likely. The point was, it was small and large alike, right? And in the Amazon to Stripe, which isn't even public, et cetera, Twitch, all kinds of things. So all kinds of platforms basically jumped on the value signaling, bandwagon and said, we're going to do something about this. So I thought to myself, not a political statement on that activity, but on the theme of decentralization as a game-changing precept for this year moving forward, because it seems that that is the undercurrent. So I know we're talking stocks and sectors and always market structure because it's tradable, but I am on this because of this reaction to Twitter making that type of call, if you will, and those who rallied in support and against, even board members who said that platform should not have that kind of power. We should really decentralize that type of power. Even to our talk today, when I brought my marketing director, James, into a chat, right, to better understand algo trading signals. He doesn't know about this space. And he asked me to explain it in 2 minutes and where he could, look at other algos and trading signals that are tightly contained, like what we have built on your site, and we're going to be launching soon. And I said, gosh, I have no idea. Let's research that, right? So we're talking about that, and I realized this stuff is so ingrained in institutions. Like, they're not letting this stuff go. They've got whole quant departments, and if a quant comes out, they buy the whole company, right? So what is available? Individuals can figure it out. They can do their own algorithmic, trading strategies and automated trading strategies. But is there really a platform for this type of, marketplace? You're creating it. It's so cool. But I didn't even realize how nascent, if you will, it was. Kind of like, the Roblox, the gaming platform, but your marketplace as well being this a place of decentralizing, if you will, this access to information. And I don't want to use democratization because that's a real vision type of term. They make this information that's available typically by very large money managers and hedge funds and the like, and macro wonks, and they make it available to retail for their do it your own. But you're doing the same thing for the gamers and for the active traders and for the retail world, whether they want to come in and actively trade, day trade or swing trade, or, just manage their portfolios. And I thought to myself, this is so cool, but that's really the hook, isn't it? It's decentralization, and they can build anything that they want and market on your platform, which is so cool. I'm excited about it. But this whole theme of 2021 being this movement, and then trying to find, at least in my mind, some themes and sectors that will pick up on this movement. Okay, I'm done. I'm done the soapbox. I got into a rant. But
it's good.
But talk to me. What do you think about, I know, game-changing themes, not just tickers and sectors, but what do you think is going to be a game-changing theme for 2021?
I think the dispersion systems, which is what this is by definition called, right? It's a dispersion system. Scott Galloway, No Mercy, No Malice.
Yeah.
He wrote a great kind of breakdown for at the end of the year somewhere in his stuff. I mean, I get his emails and so forth, but he had a great
writer.
He does the great like little word pictures and draws them and stuff like that, like whiteboards it, where he was talking about the dispersion system kind of concept and how that is it will eat, even the bigger the big fangs are in a different situation than a Roblox. And I'm not going to steal his thunder. He did a great job explaining it, but effectively it is the decentralization of the ownership of ideas. And rather than I own the idea, right, and you have to operate that like under my umbrella, right, you own the idea and you're just operating it and distributing it on the system. So we offer the roadway, the infrastructure, so to speak, to connect two parties, an end user and a producer. And Wix would be a good example of a dispersion system, right? Like Wix has done really well this past year, but is really in its infancy. Canva, right, is an IPO waiting to happen.
What is it?
Canva, Canva.
Okay.
And then you can look that up. A lot of like our CTO's daughter, he's in London, and Atif's daughter, she like uses Canva for all her school projects, and she's like becoming a graphic designer, like with plug and play pieces and parts, and it's really changing the way that corporations and everybody else does graphic design. Like she's just an example, but people are using it at the corporate level. Then graphic designers are not, kind of, doing what they used to do before, because it's a platform where I can come make my own thing and then distribute it. And you see this theme kind of running through the economy, and it was in baby steps, and even we were looking at baby steps like last year, right? And then when COVID hits, and it really expedites the process towards dispersion systems. For Wix, Airbnb is a dispersion system. My house is now something that other people can rent, and as opposed to a hotel, right? And it's the same. And there's a platform that connects the creator, the homeowner, right, with the end user, the lease person leasing the house. These types of things, because of the Internet of Things and then things being global, are totally decentralizing kind of footholds or moats around industry. And I think that this is still in the early stages to an extent of the life cycle of this, but this seems to be the new normal. Like, I'm not really a Bitcoin person. We've talked about that numerous times, but I am very intrigued in Ethereum. And I think that, you know, Vitaly, I'm going to post something after this on my feed, and it's his comments today about exactly what you're talking about.
Who?
The creator of Ethereum.
Oh, okay.
And he was talking about it, decentralization. It's fascinating that you said. I thought you read his post.
No, it was literally from those who are just, you know, angry with the results. I mean, going against 10 million votes, you know, and the attack on the Capitol and the outcry, if you will, by corporations to shut down the Parlors and the Twitters. It just, to me, was like, okay, without taking a political side, what's going to be the blowback, right? And of course, I'm thinking this in regards to tech losing its fangs, as there's still monopolies, but with Biden coming in, regime change, trying to let's just say maybe mitigate some of the damage that's already been done, right? The hundreds of billions that have been earned by very, very few and not distributed to many. It was one of those things where I just thought, and then today triggered that conversation when I thought, wow, you are really creating a marketplace. Yes, we know that, but it's totally about decentralization. And I didn't, light bulb didn't go off.
Well, you know, you kind of got to hear a little bit, because when we put out our beta site, we just kind of put it out to, like, kind of, you know, we were testing a lot of different things. And when it was always intended to be a marketplace, but we needed to test pricing structure, and we needed to test interactivity with the different types of marketplace looks and feels. Is it more desired inside the app, you know, in-app purchase, or, you know, there's so many different things you have to decide and test out with users. But like, it ultimately is effectively, I'm just one of the creators. I'm just the first creator on the platform, right? We put all the pieces in place, all the infrastructure for people to create on the platform. And then I'm just the first creator. There's been others. Now you are creating your thing.
But I didn't even think of it in terms of competition. Like, who else does this? I kind of backed into it, right? From our conversation last year. It's like, I would like to figure out if this is possible. And you're like, absolutely. So I'm not a developer mind, right? I don't have an engineering brain. I just want to translate patterns into math, a narrative into math.
Yeah, Canva is InDesign, like for design work, right? It is a product InDesign. Very painful, like painful to use. And so part of being a designer is knowing how to use that platform. Maybe you're not a good designer, but you know how to use InDesign, right? That's an example. So now Canva comes along, paint by numbers, the creativity takes over versus knowing how to use a kind of fortress platform, right? So
yeah, that would be me. I'm not learning Python anytime soon.
Exactly. And so, you know, I think that Roblox, for example, people learn how to code on Roblox, but they've spent 10 years developing that to where people can create things pretty straightforward. Wix, like I had, you know,
Shopify. I mean, that's a beautiful thing.
You look at these dispersed Airbnb, like I don't need to know how to lease my house. I just can set it all up and put it on Airbnb. And all of a sudden you have instantaneous, you know, economics just changes, right? And I think that was coming, COVID expedited it. It's my biggest theme, not selfishly because of what we're doing. We backed into this. We were creating different things. We thought that could be what was going to happen, right? But it didn't. You can't sit there and be like, oh, we knew exactly that COVID was going to happen. We knew exactly behavior was going to change. You can't say that. That's BS.
So the behavior, I mean, there obviously have been disruptors, no question. It's exciting to see Shopify take off, and Fastly, you know, as the kernel of the corn, if you will. So there are some established tickers that I already know and have traded and you know, I'm excited about. I'm wondering why Dropbox hasn't taken off yet. Was waiting for SFIX, Stitch Fix, you know, to come out. And COVID was their coming out party along with Peloton. So these are really, it was convenient, but they were also ready to seize the opportunity. But that's not so much the dispersion that you and I are talking about. So
Right.
when we're talking about decentralization, and how that may affect the big tech, and then obviously you just did a talk last week about how 294 ETFs contain Apple.
Yeah.
Not to mention, national banks around the world, right? Swiss National Bank and others that hold it like an ETF.
I think Apple is a dispersion system because of the App Store. So Apple looking at Facebook, right? And Apple just brought in, if you look at what Apple did at the end of last year, they brought in, I forget the guy's name, but he was a really successful product developer, UX guy that they pulled from the VC world back into product. And he's now running the App Store to fix it, to make it more creator conducive, right? To
And they lowered the pricing. I mean, the commission.
Correct, right.
Yeah.
They're meeting us like app creators, like we create an app, right?
Yeah.
They then create on top of, they're meeting us all at the curve. When you look at Facebook is suppressing, they're thwarting they're public. I would describe Facebook and Google, right? And Amazon's got to be very careful because they don't want to get in these two buckets. They're public utilities.
Yes. Yeah.
They have become public utilities and somewhat have to be regulated like public utilities because too many people are using them as a prime source of communication.
Did it shock you when they withdrew from Parler?
Honestly, I was very shocked that Parler, when everything that happened this weekend, being completely honest, was like not how I would handle it. Like I wouldn't handle it that way because you have transparency into what's going on in these platforms. You have the ability, and we've talked about this as a creator and a platform, sponsor to an extent, right? Like I'm developing a platform, what is yours and what is like, the platform supplying. You can easily go to the person or go to the group and go, okay, we need to talk about this the way Apple does. And this is the way me and my developer had talked about it. We were talking about internally is that Apple will tell you, hey, you've got a warning or something like this. You need to fix this or this. And it may be fairly autocratic and you've got guardrails you got to sit inside. Facebook, Amazon, what have you, they said that they had warned these people or all this stuff, but it was ambiguous versus just specific guardrails that then create that, hey, we got a timeout, I'm calling timeout, you got to come over here, we got to have a conversation, because there's so much stuff on there right now that's still on there that's like just disastrous, awful things going on these platforms, like, solicitation and just terrible things that are still there. What's up with that? And then these things are now 100% kicked off. And so they don't have a definitive rule set because they're public networks. Same to the same lines as like the FTC would regulate any kind of utility as it relates to broadcasting. And so I think that, when you look at Apple's decision with Parler was after everybody else, it was like kind of, if you don't do it, you're going to get, some stuff that you don't really necessarily want. It already got going. But I think that when you have the transparency into what these people are doing, and you did see, a big question is, why didn't you stop anything? And I told you guys, I think in the Chinese conversation we had where I created the presentation, is that the Committee for Foreign Investment in the United States talks to every app that has over 1 million users. So the NSA and the CIA have to have transparency and access based on something that was passed in the beginning of 2020 because of foreign actors from, the Chinese and the whole TikTok thing. They have to have transparency into the product. So why exactly, was any of this a surprise if people have transparency into the product? You got to ask yourself that question. So now you're sitting here, and this really is why I think that you're feeling the decentralization. Vitaly talked about it this morning with Ethereum and decentralization and what it really means. We're all talking about it because it's now monopolization with pick and choose rules, right? And that isn't, nobody wants to be a part of that because it's just a matter of time till you get pick and choose.
Yeah, and that's really that also fuels the far right's argument against the far left in the first place.
That was my main statement. If this weekend, if we were going to do this, then you just proved everybody that was saying these type of kind of this is what's going to happen type deals. You just,
but I have to pull back a little bit on this. I hear that. I hear that. But in the same way the utility doesn't decide which house gets, electricity, no matter what's taking place in that house, right? They're not policing. At the same time, there's a platform that these providers have built, the Twitters, the Facebooks, and such. And if they do have the Google, YouTube, whatever, do not incite violence laws, it's their rules and regulations, which gives them the control, the power. And yes, they have a lot of power and it can be used wrongfully. But at the same time, it almost feels like there's an argument to be made for a product liability case, meaning the product has some defects, right? It doesn't do a good job of protecting the innocent. It doesn't do any job to protect the innocent. And there's actually a product defect or product liability case in that example. So I think you can get lawyers, and in the same way that I look at any stock as the bullish and the bearish case, I think you can do that. It's a utility. It can't be regulated. I mean, police. It's a product liability, product defect case. It totally can be policed,
I think that if you look at this thread, there's a thing called gift, and it's I won't say it on here, but it's like the internet. It's basically a theory about behavior on the internet. And there's a study done that people who don't, Mike Tyson said it a better way. Vitaly put it in the thread, and then you need to read it, and everybody's gonna be like, I get why you said it. You didn't want to say it on the call.
Okay, yeah, I don't know.
But Mike Tyson said, this social media stuff allows people to say a lot of things online they'd never say to somebody's face.
Absolutely.
And I think that when you read this theorem that was proven correct by code people who created a little test, and it proved to be true that normal people are impacted by these things in very strange ways. And we've all seen The Social Dilemma, and so if you haven't, you have to watch that. As you saw that the suicide rate among young women from 2010 to 2020.
Oh, no question.
Right. And so these things, like when you talk about the platforms themselves, they had the government and the platform creators. And when I was actually really relieved when we started building this platform, and we knew what we were doing earlier in the year as we saw things unfold. So we had talked to our attorneys, and our attorneys talked to the government, and they were like, yeah, we're trying to figure this out. And we're trying to figure out how to talk about this stuff ahead of time rather than after the fact, because they do realize how much of a mess it has become. It just seems like this has gotten a little bit carried away pretty quickly here in this situation.
Yeah, but your users are very different. They're not going to be talking smack about each other.
Well, yeah, you say that, but like the cyberbullying, like you say that, but think about your conversations with Anon and about the chat rooms with the traders and
absolutely, yeah,
that's behavior. So I think
true.
that people like
or women,
in online, and like I think that when you look at it related to Parler, and you look at these things, like I think that this wasn't, decentralization is becoming a main theme, and it will be a main theme now, because this is going to trigger in a lot of different questions, which is why now Ethereum becomes much more of an interesting play, in my opinion, than Bitcoin.
All right, why? What?
Ethereum is
2 minutes. Like, what's your bull case for Ethereum? And how does it dovetail with
all of these things that I have here listed? I had just put some stuff together, but I said that COVID was a life-altering event, and I wrote something about it, like I don't know, 3, 4, 5 months ago, maybe in the summer.
And you don't mean the 400,000 that have died and all the family in financial ruin as a result?
Yeah, we could go to all the different things. That was a part of it, but like the economic structure and landscape forever. One of the things right now is that prices are all way too disconnected from the actual underlying trend. So the trends are moving where they're moving, but the prices are so obscure, it's very hard to tell, what it's like Airbnb as an example. It's a dispersion system. It's in the trend. It's a huge trend. It's going to be one of the biggest things in our lifetime. We'll be using it 10, 15 years from now, right? As a staple like Google.
Well, I do want to get those lists, but make your point.
And so like, you look at that guy the day that it went live and he said, on IPO and they were like, yeah, it's what do you think? Do you think there's any froth in this at $160 something? And he was like, what? And he's like, we did the IPO at 63 and this morning, and it's at one. He's like, yeah, it just sets the expectations higher. And he's like, crapping his pants. And he said they just did a debt offering like 3 months before that at in 30s. And so, what is that company really valuing themselves at? Probably the way that most private companies like us and everybody else, you value yourself based on what you think the market could do. And then, what the recent kind of real value structures would be as it relates to the trend, not these things that are being bid into the atmosphere. So one of the things that I was going to say about everything is that the price of everything is obscure, but the trends are totally moving in the direction that they're moving. And I don't think there's anything going to stop those trends now. So when you look at like Roku, you look at DraftKings, you look at Penn Gaming, you look at DoorDash, you look at Spotify, you look at Overstock, you look at Wayfair, you look at Pinterest, you look at, and I've got Match.com, like relationships are forever changed, right?
Mm-hmm.
People meet and all this kind of stuff. This stuff, and the longer that COVID goes on, the more permanent this stuff is, and the more permanent it's going to be for the future economic kind of functionality, even the kind of macro intertwined functionality that we live in a social construct. So I think that like Roblox, all these different things, everything's priced. Prices are now totally detached from the trend. I think the generational trends, like my biggest themes, and this is kind of concluding that thought, my biggest themes are the dispersion, are the life-altering ecosystems, right? And gaming, all those things, but the prices aren't necessarily what I would consider them even to be able to kind of wrap your head around. So it's very not dissimilar to the 2000s, right?
I was going to say, we haven't even talked about SPACs and EV and
Yeah, and
okay.
SPACs are another part of bringing to market through different vehicles. And Howard is the one that's got a really good thought on the way that stuff is coming out with having access to these things and unbundling. He had a great thing about unbundling indexes.
When was this? Who?
Howard Lindzen.
Okay.
A little article the other day. You'd have to you read one thread.
Yeah.
But it's unbundling and where you get access to SPACs, where you get access to SoFi. SoFi, for example, is a great company that's been private, right? Very successful banking for the millennials. It's really going to be one of the primo banks. Now, Chamath said he was going to bring it public in the next, whatever his, IPO-G or whatever. But it's SoFi is a great opportunity. But what's the price going to be? So like all these things come into play right here where they're really the right stuff. We're getting access to this stuff where maybe we wouldn't have gotten access to before. Is that directly related to the prices and the froth and the greed and the total?
It's complicated because not only are the valuations, outsized, but then so is the risk of the antitrust and regulation coming in under the Biden regime. So do you think that has some, who will be the beneficiaries of that? Let's just say, they actually start to fulfill their mandate, like the Federal Trade Commission.
I got to say,
has done nothing for 40 years.
Look what happened this weekend.
Okay.
Salesforce deplatformed the Republican National Convention.
What? Say it again. I missed that.
Salesforce.
The CRM
software deplatformed the Republican National Convention. So they just kicked the RNC off. Couldn't use it. And I'm like, wait a second. Like Salesforce is a B2B like sales generation, lead gen management software. The RNC, like, what are we doing here? I think
that's not about inciting violence and protecting.
You saw some bully behavior across the board by people or groups.
I heard fundraising is being pulled back. The political donations. This I get. Okay, but CRM.
Chase said both sides. We're not.
Yes.
It's off. Both sides. You two need to figure this out. But there was a lot of tech, big tech.
Okay.
Immediately pulled some real. Like they pulled some big time moves on people and they, of all different kinds, like Ron Paul. Ron Paul's like a gold guy.
Yes, but I've even had my
Facebook,
YouTube channel pulled, and this was stupid. I had like a few hundred people, and I've never ever spammed or said anything, not even an F-bomb.
well, what happens is, if you've heard the term throttling.
No.
So what happens in these environments, they throttled the platforms around the election. They throttled the platforms the week after the election, and they throttled the platforms last week, meaning that if you were advertising, you might have got zeros, like no hits, very few likes.
Oh, this I understand of late. No, I'm talking about a few years ago. I hit. Yeah.
Oh, well, yeah,
So
yeah.
it
Well,
was bizarre and random.
To me, those types of things are pretty normal as they sort through their algorithms of identifying different things. And sometimes they'll be like, oops, sorry, you didn't mean anything. It was
but people complained. Well, actually, it actually incensed some people to go in and shoot. But my point is this going to be affecting the stock price if there was an appointee, for example, to the FTC, and they actually got some teeth and did something about this intersection of monopolies and finance that the FTC has, repeatedly over the years not enforced.
Government's way behind here.
So let's just say,
They're way behind.
If they were to come in, the big argument is it would only make these tech companies better if they got broken up into their parts. They'd be worth more in part. And then the other argument is, but wait a minute, that is so difficult from a technology standpoint to break them up now. So
yes and no. If you look at Facebook, they've acquired WhatsApp, right? And now Signal. Everybody was like Signal, and the whole thing was Signal. And then
but that's a not-for-profit,
right? The whole thing. But then you've got like, so WhatsApp, they bought that. Instagram, they bought that, right? So like Facebook, owns different things, right? And they can pull these things apart. But if you go look at Amazon being cloud, got AWS, and you got the Prime and the TV and the studio. A lot of different pieces that would be fine. Go look at Rockefeller when they broke up Rockefeller. He just retained ownership of everything. It did Standard Oil. It just got broken up all these different things, and he owned all of them. So
it would be disruptive in the near term. I think de-risking.
I think that there's no there's little to no chance of this happening based on the behavior that you saw this weekend from the parties that exist for, to take power right now. They're not really going to do it unless they were doing it to show like something, but I don't think it would impact anything. I think that we don't know. And I put my thing last night, the next 2-3 weeks are pretty big for a long.
Oh yeah.
Because
hold your breath.
We don't know the outcome of the current situation as it relates to where are the chips going to fall with some of this stuff, and how far is this all going to go or not go, and then we'll see what would potentially be broken up or not. Like Josh Hawley and Rick Scott, like these guys are being really gone after as individual people. I mean, they've always been the same that they've been. Now they're really, get taken in on the chin. And is that what do these things have impact to do? And how does the landscape shape to where the political ground rules are going to be laid after January 20th and on? And I would say that, right now, the big tech feels much more stronger than they have in some time based on the things that they did this weekend. Those were strong-handed, very reactive decisions that these are pretty smart people. They're not, and they have a lot.
And it was coordinated, man. You had a lot of large and
it was
small.
Done.
Yeah.
And it was done. And so, Apple, I set separate. Apple's over in the Dispersion platform environment, and Apple's sitting on tons of cash. They build products. They're not going to get broken up. Like Apple is a different bag. Amazon, if they got to be very careful here with these things. Although having said that, like Amazon's really solid from the cloud services standpoint, and that's the thing that cranks all of their cash flow. It runs the entire ecosystem that is Amazon. Everything else is like a loss leader, right? Like the TV is a loss leader. The Prime stuff doesn't really generate. Cloud services really kills it, and they got to be careful with how they handle all this, because they don't, they want to have a global thing. And you saw Ant and Baba get taken back, right? And I think that, how does that play into my two things at the moment are China and what's going on right here, because that's obviously really in effect
Yeah,
of
for those who don't know, Jonathan's
yeah,
referring to Baba just got nationalized.
yeah,
So Jack Ma went missing,
yeah.
and Baba got nationalized. And they're
And
also,
that's going to affect NIO. That's going to affect Kweb, Baidu.
it isn't now, there's still speculative fever and
But
fervor about this whole space.
the situation with the current administration at this point transitioning to the new administration with the big tech, platforming everybody. This is a vortex at the moment. It's
Yeah.
really a mess. And as soon as we can get some clarity to that, some of these big trends come back into play. But we don't have any clarity at the moment. And these moves are really big, broad, and swift, which bring the decentralization conversation to the forefront. But I think it's fascinating that you saw the prices of that space, of the crypto space, just get clobbered as soon as all this stuff started taking place over the weekend, and have not had a chance to gain their footing. And it's going to be very interesting to watch their footing as decentralization becomes a greater theme of people's desire, right? Because this just seems like this is very there's a very interesting like trans that was the word I'm looking for, sequence of events the last 6 days. And I don't really shoot, man, I have no edge, no side. I have charts and market indications and levels and options flow and everything else, but those are so bifurcated because everybody's really kind of in the fog here to an extent of, what are these things going to mean here in a few weeks, right? And I know, like you could say, I said that it's a corrective situation where this passes and then things head higher. It's a corrective situation where it gets a little bit dicey at 7 to 10%. We go higher. Then we go correction where it goes 10, 15%. It's a little dicey, goes higher. Or the wheels come off, because it really does feel like, and having talked to a few people, just doesn't feel like the government's in front of this thing. And it feels like all the big tech's reacting to it. And we just don't know what we don't know until all of it clears. And 75 million people, and the best thing I heard all weekend was 75 million people voted for Trump, not just the people in the Capitol building, right? And so there is a significant polarization at the moment that's got to be sorted through. And I don't, we get some clarity to that, these bigger trends come into play. But I was talking to somebody about NEO yesterday, or I think it was Sunday. And they're like, what do you think? I was like, really good ideas, great kind of concept. It's like Tesla too. I mean, these things can go up and they can come down, but like in the long term, they head in the right direction, especially with technology. Prices right now, really dangerous, because you don't know all these different impacts of where you could be buying something for the long term.
And macro folks would tell you it's all about liquidity. So that the total play that's happening right now in speculation world is just, ants, if you will. The elephant in the room, of course, is the printing press and those who control it. And that just goes on and on and on. And I drew a comparison to 2000. You have, of course, many times, but in particular, just before I hit start was 2000 Greenspan print right before the 1999-2000 bubble. And that was, again, a crazy valuation period. We have far exceeded that period in valuations by many metrics. But the point was that liquidity was taken back out. It was in advance of Y2K. So all the euphoria and fear around Y2K, we have, some would argue we don't have enough fear. That's what you climb a wall of worry. But right now we have euphoria. I think that's pretty much consensus. But they keep thinking it's going to keep going higher and higher. And I look at this presentation that Biden's going to be making on Thursday with the size of the stimulus, many trillions. Little Trump-esque there, as far as we have lots of work to do, and we're going to have many trillions. Whether or not they can, get it all passed is another thing. But the point is, the printing, the debt, the market cap, the GDP, all of these things are unprecedented highs. At what point is this liquidity, if you will, going to come out of the system. Everyone says never. So keep going. And so when I was thinking of this kind of, if I was to put year-end price targets on the S&P, like so many houses do, and that's not my game, I couldn't, because I couldn't possibly without a major correction this coming year. And yet they're like, no, we're going to keep having printing. We're going to go from 3,800 to 4,500. That's like amazing because of all of this printing. Stocks are just going to keep going because, we have no problem. Dollars low, interest rates low, printing high. And I keep thinking the same thing that happened a little bit with Y2K, which was right when Greenspan printed away in to have it on in case there was a drama that was to occur, right? The Y2K, because no one knew if it was really going to be Armageddon or not, which was silly. But the point is that it didn't happen. And then the market corrected 84% over the next 2 years. So it wasn't a little correction, it was a big one. But we don't have any signs of liquidity coming out of the market, except when Bitcoin fell over the weekend, that 32% or whatever, like that's a liquidity trade. When gold, and it has continued to fall since August 4th, to me, that's a liquidity trade. So
100%.
When stuff is falling that is supposed to be a hedge, that's a liquidity trade. I don't know, your thoughts on that?
Yeah, no, 100% agree with that. And I mentioned that, treasury bonds. I have been talking about like bonds for a little bit now. I actually had somebody look up foreign investment last week. What was it last week? Like, in the auction market wasn't so good as compared to the previous like 7, 8, 10 weeks and the previous auctions. It was actually very bad comparatively. And I wonder, right, our bondability at this point being something that's in question, because you look at like tier one liquidity, T-bonds, gold, dollars, cash as it relates to wirehouses and banks, and then crypto has become a collateral trade to an extent, right? It's people riding speculative wave of it, but it's a liquidity trade to your point. And the collateral to me is liquidity, the same thing. And so like I'm sitting here watching gold get crushed on Friday, right? And then silver got crushed Thursday, Friday. I think it was like Thursday, Friday.
And then Bitcoin, bye-bye.
Bitcoin got crushed, and treasuries, especially the long dated, have been killed. I was going to ask you about yield curve steepening and stuff like that today.
I absolutely love this. So yes, obviously yields are moving higher, and I'm looking in particular because the 30 years already come up into the channel. 10-year hasn't yet. And the 5-year is the one that looks like it could be in escape velocity soon. But the bigger issue is all of these estimates. For example, those who, the Bank of Americas and the rest, who said, okay, we might, see one, right? The infamous 1% in the 10-year. Now they're raising them by 50% for 2021. Like now we're like, oh no, we're going to go to 1.45, 1.52. And it's like all the estimates get revised because of that recency bias thing. And because inflation expectations are shooting up like hot fire flames, especially for the 5-year. And that's helping the commodity trade. But it's a bear steepener. So this is something that the credit markets don't have distress right now. Again, they got the printing presses going. I look at what's going to be moving for themes like, okay, I might have just all of a sudden had a light bulb go off on decentralization, and I haven't read all these posts, but I just was like, what's tradable? Okay, what's tradable? Will stocks or commodities, right? I'm really wanting to see the despite what happens with yields, if the Fed comes in and says, okay, we can't let this get above 1%. We got to whack that mole right back down because it's too damaging for tech. Or do they let that inflation run a little bit hotter? We'll find out, but chances are
they're yammering already last week, and then continue this week that monetary is coming off, right? Monetary is coming off. Fiscal.
No, they're not going to taper. I don't believe any of that. But
100%. Like they're not, but like
but I'm still looking for trades regardless of what they do, I guess is my point.
If you read that thing about that I mentioned 2 weeks ago, I think it was last week or the week before, but it was 2 weeks ago because it was Williams' thing where he's talking about the perception of front running rates, right?
Yes, exactly. So the market prices
really,
it in, and then the Fed follows.
Yeah, and so I'm like of mine, like right here that you go the fiscal route. So monetary goes to the stocks, right, and fiscal's going to the pockets, right?
Which is anticipated to go into stocks.
Yeah, and well, there's nowhere else for it to go in the moment because nobody can go anywhere, right? They can't go to Disney.
They can pay their mortgage and their bills, but it's going to a lot of people that don't need it.
Yeah, and so especially the fiscal that goes into the actual people's hands is just a piece of the fiscal that's going into transports and businesses that are going to do government work that then those owners get wealthy and they pay payroll and stuff like that. So like I think that is direct and that is inflationary, right? That is like the fiscal is because it's direct. It's not withheld at a bank that needs to be then rehypothecated or just some mechanism to keep equities rising. So I know that they know that equities are hot, right? And they're running hot, and they've also got they've got a real, and then all the talk, like I said, and it come out this week and last week, heavy of inequality at the Fed, talking about inequality. They said yesterday that we need an economy for everyone. And that is not right. That's not going to be focused on equities. That's going to be focused on Fed programs like the Main Street Lending Program, but something totally different that's built for, providing loans and stuff like that. I think this theme has to be monitored for equities pretty significantly because if the Fed put is pulled from equities, which, it's as fast, it's like unfathomable to even say that, right? Like after 12 years. If that's pulled or there's a perception that shouldn't be there or something changes in that structure, which they're pounding the table a little bit with that the last week and a half. What does that mean? That's pretty significant for equity. So I think that like fiscal could improve the kind of current landscape, but even all that, right? All this being said, the next 2 weeks, we have to see how this thing goes down because one of the things that they said was that they shut all these platforms down because there was projected violence at
every capital,
all these things. And so you're saying
every 50, yeah.
We got to see if any of this is going to transpire or what else is going to come down, et cetera. Then I think these things become a little bit more realistic to trade. Until then, the gamma was still hot this week. It's still not slowing down from the single stocks. Those are still moving in the same direction. We are hitting like just extensions upon extensions here, but we're not seeing the underside really roll under. VIX is still holding high. In the meantime, with all this stuff going on, these are all the signs that there's a pending, maybe significant trend change. It wouldn't necessarily mean like an instantaneous crash per se, but maybe a total trend change in the whole perception of equities for this year, which could go right to your point of how do I give you a call for S&P price when realistically, these things could the S&P could be significantly if the S&P is no longer priority numero uno, then what is the S&P price, right? Like that change, that is a big deal, especially with the tenor of the landscape in the country.
Yeah, I don't even know what to say on the S&P price target, but I do have a few charts I wanted to show in regards to this, and then let's get some actual tickers that we're really watching and sector themes. One thing I wanted to point out was I've shown this before. This is the NYSE composite, and you kind of got to put it heavy into the Russell because it is a lot of small caps in here. It's 2,000 issues versus 500 versus 100. But the point is, you can see it has finally reached, right? This was taken on Friday. Remember we talked about this?
Yep.
So we have reached, and just so you know, this is big going back to 1994. For those who use trend lines and MACD and RSI and all that jazz, we have not turned over. And I have been saying for how many weeks there's no trigger to short this in size for more than a trade, which is like not very long.
Minutes, right?
So
Minutes.
and because you're following my indicator. Okay, that's it. It's done.
Yeah, that's it.
So this is right up here, but that doesn't mean that we're going to just give sway and, collapse. It could be this distribution process for weeks and months. Who the heck knows? Or it could just turn tail and collapse. A lot depends, right? This is deregulation, higher dollar, yield spike that they can't control. I mean, there are just so many macro reasons that it could cause panic, but for panic selling. But the number one is liquidity, whatever that means.
Supply. Supply
yeah,
comes into this high level supply over
but
time.
I'm still watching this like a hawk. Having
Yeah.
said that, I'm looking at, okay, so I'm looking at this going, how the heck do I come up with an S&P target for 12/31 2021? Like on the last day of this year, where do I think the SPY is going to be? No idea. So
No.
especially with this type of euphoria, we're not coming off the lows. So it's very overbought, and I'm sticking with that thesis. I don't care what anybody has for earnings growth plays, down the road. I'm saying this is danger, Will Robinson. And then the other thing that I'm looking at, okay, so what about if this little doohickey, represents a lot of pent up cyclicals, right? Oversold, and metals and mining, and leisure, and airlines, and all the stuff that has been hit hardest, economically sensitive, right? Then this wouldn't make sense to be going higher all by its lonesome. So I'm looking at stocks. Here's another one I just want to show you real quick. Here's a theme. I don't know if you can see this as well, but I'm looking at this going, all right, this is big picture, same kind of thing, but just stocks to commodities. This is a ratio, CRB, which is, oil, and you saw today with the ag numbers, wheat and corn just been shooting up for weeks because of food inflation. So is this a time where we're actually going to have commodities outperform stocks? I mean, just this one thing I'd like to know. And there's an argument that this inflation expectation and the tech being flat for 6 months, and now potentially with some heaviness, right? Both the Dems and the Republicans have an axe to grind with these monopolies and these social media companies. Would you agree?
Completely. I mean, even more so, it's like just chasing higher return. I mean, these things have had the highest return, so there's some grind for sure with people's agendas, but they just have not. They could be underperforming, right? And that could be a 3 or 4 year thing, right?
And this is the tough thing for 1 year. And then the SPACs, for example, and these are just the small caps that still look like they have some ways to go, financials and energy, for example. But even in the SPAC space, we talked about this before. We already know, for example, and I don't have this in a separate little file, but let's just go with this. I mean, the ratio between growth and value stocks is now wider than during the tech bubble. So we keep going back to this 2000 comparison. Growth meaning, right, the big tech and such, versus the value, the cyclicals, the commodities, et cetera, et cetera. Oversold financials, which, by the way, right now they are not oversold. But the point is, I still see this as definitely a theme. But SPACs, for example, and I know I'm doing this webinar on Thursday, and I can't wait because this has just been too fast moving. But for example, and this was actually a month ago, SPACs have IPO'd year to date, raising $83 billion. And this is higher than the IPO market average over the past 3 years. So this is a lot of EV. There's SPAC analysis, by the way, for that data point. There are still some sectors that look hot, whether it be EV, whether it be SPACs, whether it be oversold pot stocks that now have the Biden administration blessing. But I can't help but kind of focus in on what are the plays that will be most impactful, game changers, one theme. And then I think game changer would be stocks have led commodities for how long now? Just a solid decade, coming out of the 2009 crisis. one solid decade higher. Is this the time that they now underperform relative to commodities? Um, value now and large cap growth underperforms relative to small cap. We've had a huge inflation expectation fuel this stuff, right? But and I still think we're going to have whack-a-mole where the Fed tries to get those yields down, and it's going to affect that whole value rotation. It's really a factor rotation, so it keeps going in and out, in and out, in and out, but it's making ground, right? It's making ground and it's turning the corner.
Mm-hmm.
So I still think that has some very solid legs. But what do you have for game changing? That's kind of, for me, overarching decentralization. And then as it relates to inflection point, stocks over commodities have led for 10 years. I think we're going to have now a turn. But then for game changing stocks or platforms, what do you have? What are you really looking at?
I think the gaming itself, right? Gaming, online games. So there's two. I want to go back to what I said at the very beginning. There's two different things that I think the way I looked at this was the bigger trends that are just changes, derivative changes in the way we're going to do stuff and interact with each other. I think are gaming and the dispersion platform. So any of those things that you can get your hands on at fair value, or just any type of discounted value, will do better in the long term than some of this other stuff. Some of these, so when you look at like Roblox IPOs coming out, right? That's be probably priced pretty high. I think that's going to then come, that could come back down. It just depends. But Roblox, Medium, there's been chatter about that. Canva, chatter about that. Airbnb already been out. Wix. There's a bunch of those names that are really going to be intricate to the new ecosystem, the new economic ecosystem. Those are big trends to me that I think are definitely not necessary. If I was like going to buy stuff for 10 years and like really kind of wait, it might be worth like people bought, Tesla at $20 and it's $800, right? Like you didn't care after it was $100 or $60, right? It was just, all this talk doesn't matter to you, that we're talking about with price being overbought. As it relates to so those are my big trends, and those are some of the names that I have. I think Penn, Gaming, DraftKings, these type of names are more than just stories for me, because sports are changing, right? And gaming is 250 billion in 2025. Sports is 150 billion in 2025. So gaming is going to overtake sports. DraftKings, Penn, they're kind of like eating some of the middle ground between the sports and the gaming, right? These things that I talked about at the beginning of the call, to me, are long-term plays that are probably a little bit overpriced right now, but are not bad if you're considering looking at way out. If you're talking about a transitional short-term situation, I'm 100% on the board with you with the metals, right? With silver, with gold, with any of the PM space, especially of the silver juniors. Like, if I really like to see $26 in gold, or GDX, I should say, and then 162 or 145 in GLD. And you and I have been talking about that for a long time. And I know you had a price chart, or your BPGDM chart there up a second ago, and I'm 100% in the same page with that. I think that oil and gas, like if you got inflation going, if you got fiscal going directly into the transit and the transport type structures, oil and gas, and building road, I don't know what all they're going to do with it. Green energy, like a green energy space, where the money's going into that space, where a bunch of those things could be game-changing a product that's created in that space, where we got to see where those dollars are going to go based on what the new Green Deal is that they're putting together.
They've already run up so much. The EV space has been the
EV
plug
is
and the
kind of,
fuel
yeah,
cell.
EV is like kind of like saturated. Like there's going to be other stuff that takes place, but I think like EV is like, you still need coal, right? So like, there's some other side, there's some other side stuff that takes place with all the sustainable energy. I think that once that space will be really, so once you can see the details of where that stuff is going to be headed, and just do some quick,
we have too many to put. I'm going to try and pare it down. So I'm going to give you two choices. For example, cannabis and crypto, which will outperform in 2021? I know it's not fair, but I think
cannabis.
Fair.
Yeah, I think cannabis is crypto is going to be a zero or a hero type thing. I think Ethereum, which is an actual system, right? That can be operated off of that's got a different story. I think the coins, I classify it as coins versus blockchain. They're two different things. I like blockchain. I don't really like any of the coins. The marijuana space is prohibition being lifted. That is a massive, massive growth opportunity, because that's a taxable, profitable situation for the government. People can monetize it. You got distribution networks. You've got dispersion platforms that can come off of that. Growers connected with buyers, like all kinds of different things.
But you didn't pick one or the other. I know the bullish.
No, I'm picking pot.
Oh, okay.
Yeah, I'm not picking. I don't pick the coin. I'm not picking the coins. Like
Okay.
I like Ethereum, but I don't like the coins. Like I like.
Okay, so your number one pick though for 2021 sounds like it's going to be Ethereum.
No. I like
Okay.
Ethereum in 2020 to 2030 for what it could do for the decentralization conversation.
Got it. Okay, so Ethereum for the next decade.
Ethereum for the next decade. I think pot is like almost like imagine booze being lifted.
Yeah, I'm not looking for the decade. That's the kind of stock to commodities I think we're going to have. Like,
I think pot. Yeah, pot.
Okay,
pot
so cannabis over crypto. Now this is not fair, but EV over these oversold energy plays. In other words, the oil and gas plays that have been coming up off the bottom as energy proxies. Which do you think is going to outperform next year? The EV, which has already run up. I mean, run up. Trees way touching the sky. Yeah. Or the oversold energy, which is still got a reason it's oversold, right? Is there real investment opportunity, et cetera, et cetera. But so EV over, we'll call it, I'm just going to call it energy sector. Which do you think will outperform in 2021?
2021?
1 year.
1 year? Oh, energy.
So you like the oversold energy bottom fishing plays.
It's just a trade. It's not a macro theme. It's just a trade. EV is speculated to price way past the point of the trend, and energy is like basically saying that it's just gone, and yet we're all using gas pumps. So
okay,
there's a broken until we get the one of the things that I heard about the NEO thing was like, yeah, it was a guy I'd never heard of it, but like they change out your battery, right? Like you go to the thing and somebody swaps your battery, you don't have to recharge. And I was like, oh, that's cool or whatever. And I was like, I don't, how long would it be before we'd see 1,000 of those stations in the United States? Like, years. So, we're pricing in like way into the EV.
What I love is about my son's in college now, right? But I mean, the electric skateboard craze, all of a sudden, this is,
yeah, scooters, right? Yeah.
It's a scooter.
Yeah, but you can't touch them now unless you got you got to bring your own wipes to like wipe down the handles, right?
Jeez, it's an electric scooter. Anyway, but okay, so now next, I know how we both feel about gold. It's going to go down before it goes up, right?
Yep, down before up. Yeah.
Yep.
Down before
so
up.
Then I'm going to ask you, gaming over guns over gaming. Sorry, but guns is a freaking hot topic, hot button.
Loaded
right?
question.
It's a loaded question. Oh, you didn't go there.
Yeah.
But I know how you feel about gaming.
Ooh, man, that's tough.
But we've already had like the, ATVI, the EA, the Take-Two, but I'm talking about your gaming Roblox.
Yeah, no, I think
platform.
I think gaming will outperform guns unless we all are using guns.
Oh no. All right. So he's got a couched gaming over guns.
Gaming over guns. Unless we're in the case that we're guns over gaming, then there, most of everything we're talking about.
Oh, this is a good one. Panelist just says guns, that's US, gaming is global.
Yep.
All right. And
It's a good point.
And okay, so let me finish my game here.
I'm good. Thank you. Thank you. Thank you for that call. I'm one out of 3 or 4 here.
All right, so we got cannabis over crypto. Ethereum is a different mood, and EV probably is that same decade type play, right?
Yeah,
It's
100%.
gonna go like, like that.
I
Okay,
think that oil and gas space is do that last, like, come back, and then die, right?
okay,
I
okay.
think that take, in a bigger picture. So you're going to see the comeback, and then over a 5-year period, it just goes away. Autonomous cars, light speed rail, all that stuff we should be doing that we're not
Okay.
doing. We'll
Okay.
get.
So we're on the same. Okay. So then I'm going to ask you two more. Okay. US will under or outperform China.
Ooh, for the year?
Yeah.
For the
1 year.
Underperform.
All right. So I'm sorry, China over US, even with all this funny business that's going on with nationalization.
Honestly, like, that's the edge.
Okay.
That's
Okay.
the edge for them. Like, we have a free, pretty much a free functional market with a lot of inputs and outputs, and they just take the company. So I'm going to bet on the guy that can just go, walk over and take the guy out of the office and say you're done now and take his company. So he can say
That's power.
same way with the GDPs, like, GDP looks like about 6% this quarter, right?
And it looked like it last quarter. And oh my God, the quarter
and the
before
last
that.
10 quarters before that. So I'm going to bet on that guy's, like, ability to
They
manipulate.
do get decisions
Effed up
quickly
situation.
passed, don't they? There's
Yeah,
there's no
they do.
management by committee.
No.
Okay,
No.
and the last one.
And the current, I think, caveat there too that could be extremely interesting is their digital currency.
Oh, no kidding, which is
That come into
okay.
play into the year that they're testing now as it relates to the One Belt, One Road thing and everything they got going on over there in the Far East and into Central Asia and then Africa, Greece, etc. Could there be even more that shakes out from that tree, especially if we continue to falter economically with COVID and had just continues to have these just ongoing economic effects. So
then that's a play on the dollar short.
dollars long in the sense of, like, gotta be like it's the plumbing network for now, and then long dollar is short, like, and so spikes of some kind, and then definitely in the long term.
Okay, we're not getting any spikes though. We're getting
Yeah.
little like pauses, and then it goes back down again. Then it pauses, then it goes back down. But nonetheless, I hear you.
Yeah. I think you're the weekly for me on the dollar chart on the last week, like it kind of stopped right at my VPOC for the weekly perspective last week, and it just been sitting there. And so I think from my perspective, it's nothing really a big deal about that. I think we from a sheerly mechanical plumbing perspective, the dollar is definitely still looking like it could just cause some serious pain. But that's just that's not a long-term thing. Until the dollar is not the reserve currency, we'll continue to get these kind of counter trend spikes over like a little bit more extended period of time, because it is the thing that everybody goes back to. As you said, where are they looking for liquidity? When you sell gold, what do you go to? You go to dollars. When you sell treasuries, what do you go to? You go to dollars. When you get a margin call from Thinkorswim, what do you go to? You go to dollars. So I think that as long as that transpires, like, that's exactly what I'm talking about. Like, this is like long-term hold. I denoted last night that 93 level and then a 97 level. Both of those are like potential spikes up in this situation, and both of those will kind of dictate whether we get some corrective and continued bull market, or a real serious correction and continued bull market in equities, or a above 97 is significantly problemsome for everybody, and that would be M's and everybody else.
But it is kind of funny how we both saw this, right? This is gold inverse, and then it was rejected. And the same thing happened last week as well.
Yep.
So we were literally on that call Tuesday saying, yeah, we don't trust this one. This looks like it's just going to get rejected like last time. Sure enough, it did. Yep. Okay, then the last question I have is semis or SPACs, which will outperform in 2021? Remember,
SPACs.
Semis make the world go round, right?
SPACs.
And they just got an upgrade again. They were already expected to grow at the trees again. They're touching the sky already, but they're expected to grow 8%. They came out and said, no, we think it's going to go 10%. And then here's another thing. Yeah. So there's another reason why semis, he's saying buy a ton, not SPACs, because all the stuff that people are buying with their stimulus checks and all the work from home stuff and the gaming and the world runs on semiconductors. So I keep seeing the analyst and the 5G, duh, of course. Yes, I'm missing really key stuff. Autos.
So what you said 1 year though.
I said 1 year.
You said yeah. So just saying, you said 1 year though. So SPACs.
Okay.
Semis,
Okay.
Taiwan, right? And China, they want Taiwan, and all the semiconductors are made in Taiwan. I'm not until that's settled. I'm not long semis like that, like because
Okay, but there's an absolute fundamental theme and such for semis, and now we've got SPACs. I literally put together a watch list.
fundamentals.
Okay, forget fundamentals. I literally put together a watch list on January 7th, right? 198 SPACs. 198 SPACs. I think there were like 240, but some of them are like just, pennies, and I just ignored those. So I put 198 in a watch list so that I could learn about them. We're going to have this webinar on Thursday about SPACs, and I'm so excited. And so I put literally 90% of them are green, and not a little bit. From 20 to 200%. I have 9 that are slightly red.
Yeah, I mean, SoFi, for example, SoFi should be public, right? They're taking a public via SPAC. There you go, bingo, right? I can't, like, those are going to significantly outperform semiconductors on a macro scale. Like semis green, but SPACs are going to be more green. And so that's the question that you asked me. And then I also am very afraid of Taiwan because of the whole situation. Like, you saw this weekend, yeah, SPACs equals 1990.com. Yeah, yes and no. Like the SPACs have been going on for a while with the reverse, mergers, right? And most of those were Chinese. Like what's his name? The dude, he's really big. Gosh, I can't. He's in Philadelphia. He did all the studies on the Chinese stocks.
I don't know. I only know 2. The Kyle guy.
No, he oh my God.
Deep Throat IPO.
Yeah, he does a lot of it. But then, oh my gosh, he's a little outlandish.
They all are.
I forget. I'll get a name. But the Chinese stuff was being used for the SPACs for a while. It's just a vehicle right now, and it's actually being utilized. Yeah, like Chamath is bringing stuff public, and I'm not like really all over this stuff. Don't get me wrong. I'm not like talking my book here. I don't have any time for like getting into all those and evaluating them all. I'm just saying that like they're actually bringing decent companies. Like SoFi is a good company. It's not like a crap company like pets.com. There's like millions of users on those platforms that are doing banking, student loan refis, buying their first house, trading. That's an ecosystem. SoFi is an ecosystem. That should be like, but it's going public a lot quicker than it would have historically, and it's cutting out all the other middle people. I'd be very interested to see what he says on Thursday. I'm going to be there and listen to that because I think
questions. Yeah,
there's a total like potential like long-term impact of this time, and I just think they do a little bit better than semis. If SPACs get hit like 99, semis are going to get torched too, because all the tech's going to get torched if it's in that kind of conversation. Like if we get that kind of situation, then all those are going to get lit up. But I think that, we don't know some of the outliers. We can't throw that out there at this point. We don't know what they are yet.
Okay. So then that's it. And I guess the last one, I didn't even talk about, forgive me, the boring stuff, the utilities, staples, REITs. I didn't really go with anything fixed income whatsoever, but I do have a last one, and I don't have a clue, and you probably don't either. But Bitcoin, the old god or the new god?
At the end of the year, like percentage performance?
Which will outperform, Bitcoin or gold, by the end of the year? Which would you rather own?
Personally, I'd rather own gold. But because the banking, and here's why. Like, and I'm not saying you don't own some Bitcoin, because it's it's definitely something. It's a cross asset diversification. I think with the things that we're staring at, collateral is really important. And when you're dealing with the the unknown unknowns of the economic system at the moment, and
Yep.
then you've got to kind of trust the things that have always held firm, and that would be that are part of the banking system currently. And I know, right? I know that people, yeah, I know that people like think that Bitcoin is a cross currency, but you still have to convert it back into dollars, right?
Yes. Yes.
And so like it's
And it
kind
still has the risk of regulation. It still has the risk of digital yuan. It still has the
well,
risk of
look,
people
they
forgetting their
said it.
passwords.
They said no. They said in England this
Custody.
weekend. They said in UK, you don't bring your profits over here. Like we're not going to let you bank them.
Yeah.
Right. And I'm going to say that I go back to this in the same context, and you guys can hate me and not like it or don't even listen to it. But when you look at what China just did with Alibaba, right, and with Ant, and then you're sitting here and you're going, we're going to break apart the entire infrastructure's control over everything. Do you think that they're going to let you do that? And at this point in time, my bet is no, right? They're going to tax your brains out, or they're going to do what the UK just did, and they're going to say, don't deposit it here, right? And basically do what the United States has done to people for the last 60 years with the SWIFT system. And they do what they did to Iran, and they go, we're not going to allow you to cross purchase anything in the world. How about you can't wire anything, right? And so you can do the Bitcoin transaction to somebody else in Bitcoin, and then you're do the wallet over there or what have you. But that's like that basically you're shadow banking yourself. So if you're thinking that this is going to be like the where everybody resets the dollar to Bitcoin, I think that's as likely as them resetting the dollar to gold. Ain't going to happen. They're going to reset these things to what makes the most sense for them. Just like Ant just got shut down and Alibaba just got grabbed. This is like you're messing with the largest holders of weapons in the world, and I just think it's a little bit. And I could go on the record and say this. I think it's a little bit optimistic or hopeful to think that there's just going to be something that supplants the way that this works. These governments aren't going to let that happen. And so what is a part of their system right now, gold, dollars, silver, different things, you can, these things are a part of this. This is a long story. And I think just like sitting there and going, this is going to be that simple. And, right now it's they'll let it run hot, whatever. But then, the minute that they want to shut it down, and I have dealt with, like in the past business, like we created the last tech company we had, and we dealt with the banking system, and we dealt with ACH, and we dealt with wires, and we dealt with Swift. And I'll tell you, like, if they shut you off, they shut you off, and that's the end of it. Like, they just turn you off. So like, all that stuff that's going on with this, it's the government's a little step behind, but they'll
Play catch up.
Yeah, it's like it's
okay.
Be careful with that stuff.
It comes down to paper or things. You prefer things over paper.
I prefer like theoretically, you're gonna have to. Somebody asked me this the other day. I think you're gonna have to ping pong a little bit. I think you're gonna you're gonna have to probably hold a basket, because they're all gonna get whacked in different ways and go up in different times. So if you said like 25% dollars, 25% gold, I don't know that I would be holding like 100% equality across the board, because they're all going to move into different structure. But I think that Bitcoin is totally traded based off of excess liquidity, and that's been pretty much a static quo.
But as Peter just said in chat, Bitcoin liquidity is a two-edged sword. So
100%.
Yeah.
Yeah.
All right.
100%.
So then your top three, I guess, underlying plays for 2021 that you think will be higher, not lower. Like you have some conviction here. I know you just said Ethereum, and this is not an either or. Free will, what do you choose?
Three for that are done that are done at the end of this year compared to where they are right now?
No, just higher. Definitely conviction, outperform. Even if we have a big pullback, they're going to pop up like a daisy, whatever you want to say. December, it sounds like you've got some conviction with Ethereum. And again, you don't know where it's going to be in that swing, but you gotta put your stake down. 3, and I know Airbnb is kind of new in its IPO. It could get bounced around a little bit. Wix.
I think if you look at it, I would love to see what Roblox comes out.
I know. Yeah.
I would love to see. I definitely think Wix could do solidly this year, no matter what happens. But in the long term, like kind of holding steady. Now, having said that, when you're dealing with something so mispriced, right, as the market is at the moment, trying to pinball, something that might be green at the end of the year. I would go so far as to say stuff that maybe is just coming onto the scene, stuff like SoFi, because the market hasn't necessarily digested what those prices are really going to be, as opposed to stuff that's already really bid up, way out of hand. I think if you look at this market right here, and I know people were like, last year, look, everything finished up and they'll just come in and print what have you. I can't tell you my conviction right now at the 12th of January is that some of these prices are significantly unsustainable. And, we don't know what the real fair value of these trends are. So if, I think that some of the bio stuff probably has the best opportunity.
I was just going to say, so if I was to hedge a bet,
that's not going away, right? Unfortunately, right?
I would say, okay, not the genomics ETF per se, the ARC thing, but this oncology section is and has been great. Not up the most, but least risk up. Okay, one says Qualcomm, TDoc, and Crowd. So you get the security.
TDoc I had written down. That's definitely something I would agree with. Teladoc is definitely something I would agree with because of the environment and the long-term change.
And the security. I mean, look what happened to Faye. Got defended and then it went whoosh.
DraftKings, Match.com, right? Like some of these things that are interacting, people, anything that's kind of like COVID not going away, to me, is probably a fair play versus the equities market itself, kind of a price for, I'm not really sure what it's priced for.
Okay. All right. So I think we covered a lot. I think we're way past our usual,
it's fun though. I like this game. Yeah. Everybody can get on here and be like, you were wrong.
I wrote them down. I'm going to timestamp it. I'm going to put it somewhere, probably a tweet, and then it will remind me right on 12/31. But I didn't put you under the gun and say, you have to pick, 3. It really was the concept of, this over that. What outperformance moving forward, 1 year, not 10. It's a tough game to play. And also recency bias is so strong in our psyche, but at the same time, you and I are looking at short duration, medium, long term. It's a fun game. Let's see where we are in 12/31.
Well, just think about this. So if we did this last year, it would have gone down like 50 to 75% in some names. And then you would have been back up like 30, 50, 75% in the same names or higher. Like 10, I think, was like $4, $5, $9, something like that.
This year has to have an asterisk. So 2020 has to have an asterisk next to it because nobody could possibly lose if they were bullish, first and foremost, right?
But like you look at some of this stuff.
At the dollar.
Yeah, you look at some of this stuff that like the way that it moved last year, I think you're going to see the same kind of displacements, this year, just maybe different, but like you'll get displacements still. So like the plumbing to those displacements really, to me, is the key to the whole thing. Like the trends are the trends, they'll continue until they get displaced. And then, we see how those shake out. That's my tactic for the year. That's my perspective for the year. And that's why I think all this stuff that you're making and putting on the platform is really good. Shameless plug there at the end.
I'm excited just because, like I said, I didn't even think we're backing into this and I didn't even think about this. This is all feeding into that decentralization theme. And it's a beautiful
Yeah.
theme and we
Yep.
need it
Yep.
theme.
Yeah.
So,
Absolutely.
all right.
Absolutely.
Thank
Yep.
you so much, everyone, for hanging in with us. And yes, it's a long episode, but it's an important one. I think it'll be a time-stamped one. We'll look at this um, later. But for right
Yeah.
now,
Absolutely.
have dinner. Thank you again. Tuesday, guest captain interview series. And on Thursday, don't miss it. There's a good one in on SPACs, which again, we're going to decipher what works moving forward, given this euphoric backdrop. And I'm very much looking forward to it because it's too much fast moving info. So I have an expert who's been doing this since 2007 to weigh in on why this has taken off and what's going to be sustainable moving forward. So it's a good theme. Come back on Thursday. Bye.
Take care.
Thank you.